If you want to lower your lifetime tax bill, you're in the right place. Welcome to Rooney & Associates TNT Tax Strategies, where we believe in paying Uncle Sam what you owe, but never leaving a tip. Do you regularly give to charity? Perhaps your church? Qualified charitable distributions, otherwise known as QCDs, may be the best way to reduce your taxes. A QCD is a strategic way for individuals aged 70 and a half or older to donate to a charity directly from their IRA instead of stroking a check. You can donate up to $108,000 in 2025. This approach offers several benefits. The most significant is that a QCD is excluded from your taxable income. Unlike a regular IRA withdrawal, which would be subject to income tax, the amount you donate via a QCD is not counted as income. Since a QCD is excluded from your taxable income, it effectively lowers your adjusted gross income, or AGI. And a lower AGI can have added benefits, such as reducing the amount of your Social Security benefits that are subject to tax, helping you stay below income thresholds that could increase your Medicare premiums, and potentially avoiding a higher marginal tax bracket. If you're age 73 or older and subject to required minimum distributions from your IRA, a QCD can be used to satisfy all or part of that obligation without having to pay income tax on the distribution. And lastly, since a QCD is not a tax deduction, but rather an exclusion from income, you can benefit from your charitable donation even if you take the standard deduction on your tax return. For many taxpayers, the standard deduction is larger than your itemized deductions. So a QCD allows you to get a tax benefit for your charitable giving that you might otherwise miss out on. Here's how QCDs work. In this example, let's say we have Betty. She's age 74, has an IRA balance of $1,275,000, and has to take a required minimum distribution, or RMD, this year of $50,000. Betty's very charitably inclined. She regularly gives to her church. This year, she pledged to give $50,000 to her church, which is exactly her RMD. If she takes her RMD for the year, deposits some money into her checking account, and writes a check for $50,000, and then gives it to her church, she'll have to pay tax on her full RMD of $50,000. Assuming Betty has a 24% effective tax rate, she'd pay taxes this year related to her RMD of $12,000. And this is the way most people give to charity. However, in the same case, if Betty were to use a qualified charitable distribution instead of writing a check, she would simply make the same donation of $50,000. But it would come right out of her IRA and go directly to the church. When she takes this approach, she pays no tax on the $50,000 RMD because she used that distribution for a qualified charitable distribution. When Betty uses the QCD, she saves herself $12,000 in taxes and still gives the same amount of money she would have given had she written a check. In summary, the benefits of using the QCD approach for charitable giving are that the money you donate is excluded from taxable income, which lowers your adjusted gross income and provides additional tax benefits due to lower income-based charges. By using a QCD, you can satisfy all or part of your RMD requirement without having to pay income tax to Uncle Sam on the distribution. And finally, for many taxpayers who are better off with the standard deduction, you can still take the standard deduction and receive a tax benefit for your charitable giving by using a qualified charitable distribution. If you want more tips on lowering your lifetime tax bill, be sure to check out our website at raawealth.com. I'm a CPA and certified financial planner. My name is Tyler Peterson.